Hello everyone, welcome back to the channel. In today's series, we will be diving into the world of Xiaomi, the tech giant that has been revolutionizing the way we think about smart devices. Whether you're a long-time fan or just curious about what makes Xiaomi stand out, this video is packed with insights you won't want to miss. So let's get started. Welcome back to SDA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high-quality tutorials, guides, and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and to be the first to access these valuable resources, hit that subscribe button now. By subscribing, you're opening the door to a world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. So, who is Xiaomi? Xiaomi Corporation was founded in April 2010 by Lei Jin and a group of 7 co-founders in Beijing, China. Lei Jin, often referred to as China's Steve Jobs, envisioned creating a company that would deliver high-quality, innovative technology at affordable prices. The name Xiaomi translates to millet in English, symbolizing the company's mission to focus on the little things and provide value to everyday users. Xiaomi started by developing a customized Android-based operating system called MIUI, which gained popularity for its user-friendly design and features. In 2011, the company launched its first smartphone, the Xiaomi One, which was a huge success due to its high-end specs at a fraction of the cost of competitors. This marked the beginning of Xiaomi's rapid rise in the tech industry. The company adopted a unique business model, selling devices at near-cost prices and focusing on monetizing internet services and software. Over the years, Xiaomi expanded its product lineup to include smart home devices, wearables, laptops, and more, becoming one of the world's leading tech brands. Today, Xiaomi is not only driven by a major player in smartphones, but also a key innovator in IoT, or Internet of Things, and AI-driven technologies. Xiaomi has also been turning heads as the tech giant's market value recently surpassed an impressive 1.3 trillion Hong Kong dollars. This milestone comes as no surprise, considering the company's remarkable year-to-date stock increase of a whopping 49%. Is the stock becoming overvalued? Or is it still a good buy at these current prices? Let's dive in to see what makes this stock particularly interesting right now. Xiaomi stands as the third largest smartphone manufacturer globally, commanding a significant 10.62% market share in the October 2024 quarter. The company's strategic positioning primarily revolves around delivering high-performance technology at competitive prices, which has proven particularly effective in emerging markets. The company's market strategy has yielded impressive results, with smartphone shipments reaching 42 million units globally in the third quarter of 2024, just behind Apple's 34 million units in the same period. Moreover, Xiaomi's approach to product development focuses on yearly launches of improved models while maintaining consistent price points, strengthening their value for money proposition. Xiaomi smartphones in mainland China has achieved a 14.7% market share and is ranked number 4 in terms of branding, just slightly above Apple's smartphone shipments in China. In my previous episode, I've dived into Apple's smartphone business and indicated that its smartphone business in China has been in the decline. You can watch this episode to make an informed comparison of both Xiaomi and Apple in more detail after completing this video. In this table, we also note that even though Vivo has secured the top position in terms of smartphone shipments, the number of units shipped is only higher by not a very wide margin compared to Huawei. Therefore, this gives me an indication that the smartphone business in China is highly fragmented and highly competitive. Xiaomi has successfully captured the attention of tech-savvy consumers and value seekers across global markets since its founding. The company's renewed focus on younger demographics, including millennials and Gen Zs, have helped establish a strong presence in key markets like India and China. Notably, Xiaomi's market strategy minimizes traditional advertising costs through digital engagement and community involvement, allowing for more competitive product pricing. This approach has been instrumental in maintaining their position as a leading technology company while expanding into new market segments. Here, we know that Xiaomi has a global base of connected devices of 861 million users, and this has been growing at a steady pace. We also note similar growth trajectories in its smartphone home app and its AI assistant. The data represented here indicates that there is a growing number of users for Xiaomi applications, and this could create a sizable ecosystem where users become reliant on Xiaomi and the cost of switching to another brand becomes very high. The growing number of active devices will give Xiaomi a good position to generate recurring revenues from its user base in the future. Xiaomi's smart home appliances business has also seen good growth in the September 2024 quarter as air conditioner shipments was up 55% year-on-year, while refrigerator shipments was up 20% year-on-year and washing machine shipments was up 50% year-on-year. Wearable shipments was up 50% year-on-year due to the new launch of the Xiaomi HyperOS 2, which controls home devices directly via a support dual mode intercom process with both network and Bluetooth capabilities. Xiaomi's launch of its smartwatch, the Band 9 Pro and S4, has also contributed to the increase in shipments for the September 2024 quarter. Let us now dive into Xiaomi's EV business. We can also see that its signature SU7 model has also been growing at a steady pace this year, with deliveries in the September 2024 quarter of 10,000 vehicles. The company also signaled that deliveries in October 2024 will be ramped up to 20,000 vehicles due to Xiaomi's latest introduction to new technological advances in production that could create efficiency in manufacturing. This new production process has helped Xiaomi roll off each new vehicle from the production line in just 230 days, which is a huge improvement. Deliveries, however, still pales in comparison to BYD's, which delivered over 500,000 vehicles in November 2024 alone, as BYD had an early advantage in the electric vehicle business. I have also done a previous episode about BYD's business in more detail, and you can watch the video after completing this video to make an informed comparison between BYD and Xiaomi's electric vehicle business. Xiaomi has also an aggressive R&D strategy, with plans to invest RMB 30 billion yuan in research and development for 2025. This is a significant increase from 2024, as it underscores the company's commitment to innovation. Furthermore, Xiaomi's patent portfolio has grown substantially, now holding more than 41,000 patents worldwide. The company's R&D team comprises of 20,000 personnel, representing over 50% of its total employees. Specifically, Xiaomi has established an AI Lab Foundation model team with 1,200 AI-related employees. As a result of these investments, Xiaomi has strengthened its position in emerging technologies, primarily focusing on AI development and smart manufacturing capabilities. Let us now look at some of Xiaomi's financial and valuation metrics and compare it with the industry. Xiaomi's valuation today has a price-to-earnings ratio of 62 times compared with Apple's price-to-earnings ratio of 39 times and an industry average price-to-earnings ratio of 22.3 times. Xiaomi's price-to-sales ratio is at 26 times versus a price-to-sales ratio for Apple at 9 times. Xiaomi's net profit margin as at September 2024 was 5.68%, while Apple's net profit margin sits at 29%. In conclusion, financial projections paint a promising picture for Xiaomi's growth trajectory. The company's earnings are forecast to grow by 23.4% annually, substantially outpacing the Hong Kong market average of 11.7%. Revenue growth is expected to maintain a robust pace of 15.4% per year, with earnings projected to double over the next few years. Subsequently, Xiaomi's global strategy encompasses both emerging and established markets. The company is primarily focusing on fulfilling domestic demand presently, though plans for European expansion are already in motion. Essentially, this approach aligns with their long-term vision of becoming one of the world's top 5 automakers within the next 15 to 20 years. The integration of AI technology into product offerings stands as another crucial growth driver. All these factors combined could have contributed to Xiaomi's high market expectations factored into its share price today. Therefore, is Xiaomi overvalued? With Xiaomi's weighted average cost of capital at 7.67%, I valued Xiaomi at Hong Kong dollars 17.41 per share. At today's share price of Xiaomi, this trades at a 72% premium above my intrinsic valuation. In my opinion, it seems like Xiaomi looks to be overvalued in today's share prices due to the company's promising growth factors for the future. Will Xiaomi exceed the market's expectations still remains to be seen. The Chinese are known to be cutthroat in terms of price wars, causing dilution of market share over time. In my opinion, Xiaomi has to do more to add value to its users, not just compete in price, which could result in price wars and thin margins. Till then, hope to see you in my next video. Goodbye.